What's driving this rally, and what's your sense of whether or not it's sustainable?
There are some underlying fundamental dynamics going on here that certainly are supporting the Japanese market rally. There is ongoing development with Abenomics, where we continue to have additional arrows being fired in various forms. You know, it's reform and restructuring at this point, with a significant focus on propelling Japanese companies to become more profitable. Yeah. We'll see whether that's successful.
And by the way, that's not just kind of a QE thing. There are the restructuring pillars as well.
The QE thing was the first arrow that was doubling the monetary supply, and since they've done that, the stock market has doubled.
Yeah,
I'm just saying it's a more solid base than you would have get from just the Fed QE.
Yes, yeah. This is an underlying corporate fundamental push to improve profitability. That's one. Another is lower yen is certainly helping to spur better growth from an export perspective. You look at earnings revisions with the Japanese market, and one of the more significant markets, you know, over the course of the last year to date, from an estimate revision perspective. So, you know,
revisions upward.
Revisions upward, yes. You know, the market at this point is not a cheap market, if you will, at 19 times forward earnings, but there is expectation that we continue to have, you know, positive earnings momentum, and I think that's part of what's going on. Plus, you know, there's certainly a risk on trade right now with Greece and whatnot as well, you know, for the day.
It doesn't, you know, I pull up here on the Bloomberg Japanese GDP over the last, 15 years in this chart, and I'm not seeing any real breakouts other than a little bit in Q3 2011. Yep. We're basically seeing 1% or less over the last 2 decades. Is this going to change? Are we going to see a climb, or is that just acceptable growth, real growth?
Isn't that the crazy thing in the last 10 years, that GDP doesn't map onto equity markets at all because of central banks?
And it's not been a lost decade for Japan. It's been a lost couple of decades. And that if you want to take the bull story in Japan, right now it's that you've got an underlying sense of change, whether it be consumers that are starting to perk up a little bit, whether it be wages that are starting to be paid more, and those two are interrelated, whether it's the openness to external factors. There's more tourists coming into Japan now than there have been in years. And all of this is part of Abenomics. And again, that's the positive aspect of things.
And the tourists like the cheaper yen. We got to talk about what's happened in Asia. This unbelievable move in the equity rally that has captured our imaginations here. Is the Chinese market just on fire? Is it a bubble? Well, here's what I thought was actually really interesting in one of the stories I saw.
Is it volatile at all?
No.
Slightly.
What I read in a story that our producer Ted Fine kindly sent around was that in the past, every time the market has sold off even a fraction, the Chinese state media has come out and publicly talked up the market. And this time, they haven't done that.
Well, I wouldn't say it's necessarily the media. It's been that in this rally since we've started last September, every time there's been a pullback, there's been a policy move, whether it be another base rate cut, reserve requirement cut, an announcement about another aspect of opening up the financial markets.
The government has been supporting the equity rally.
Well,
has something now changed?
I don't think so. We did have, you know, a significant correction last week. We've had a few of these now in the rally since September that have been sparked by an issue on margin accounts and things along those lines. That was one of the proximate causes for last week's pullback.
A lot of this buying is super leveraged.
But the core underneath of this rally, which it's been in 6 spikes over the course of the past 15 years in China, is all about retail momentum. This is a retail-driven market, pure and simple. They get onto a theme and they run with it. They WeChat about it, and you know the stocks move higher. It's been extraordinary. Now we're up 100. The high point before we had this little correction, we were up 151% since September 1st, which is kind of how we date this back.
We had a little correction last week, but we had.
So what? A correction
2 days ago, we had the biggest gain in 8 years, and then overnight we had again the biggest, even bigger gain in 8 years, 2.5% overnight. So
the $64,000 question at this point is, where do we go from here? Because we've had 6 spikes in 15 years, and every one of them has ended poorly, because as soon as you have the retail investors come in, at some point, there's a catalyst and they head back out. In this instance, there is the opening up of the financial markets, whether it's...
All right, with the change in H shares and all that stuff.
Exactly.
Yeah.
Shanghai Hong Kong Connect, other financial market reform and opening up. If there can be a development of an institutional base of investment, through pensions, through institutional management.
That would provide more stability, perhaps.
That's a baton that could be passed.
Okay, and the regulations have changed. Who's able to buy? Perhaps we'll see more foreign buyers buying Chinese equities. Tim, thank you so much.